Good morning, good afternoon, good evening, everyone. Wherever you are in the world, I hope you and your loved ones are healthy and safe. Thank you for joining the Atlantic Council's Global Energy Center and Africa Center for this discussion on global oil markets and Nigeria's response to market volatility. My name is Randy Bell, and I'm the director of the Global Energy Center at the Atlantic Council. We are honored today to welcome Mele Kyari, Group Managing Director of the Nigerian National Petroleum Corporation, to the Atlantic Council. Mr. Kyari has been responsible for guiding Nigeria's national oil company through the volatility fueled by COVID-19 and the recent OPEC negotiations. We look forward to his insights on the OPEC meetings, as well as NNPC's engagement with local communities in the wake of COVID-19 and efforts to diversify its investments to new sectors of the Nigerian economy. Halima Croft, Managing Director and Global Head of Commodity Strategy at RBC Capital Markets, and perhaps more importantly, Atlantic Council Board Director, and the most important, our good friend, will moderate today's discussion. Halima has an extensive background in global oil markets and actually got her start specifically covering Nigeria. So this promises to be a fantastic discussion. A few administrative details before we get started. If you're interested in asking questions during the Q&A session, please submit them using the Q&A function at the bottom of your screen in the Zoom app. You can follow the conversation on Twitter using the hashtag ACEnergy, and we encourage you to follow the Atlantic Council Global Energy Center's Twitter account at AC Global Energy. And with that, I'll hand it off to Halima. Halima, over to you.
Great, thank you so much. Thank you everyone for joining us today. It is such a fantastic time to have this meeting. We just had the OPEC meeting on Saturday, where they announced that the April cut would be rolled over for an additional month. There has been a lot of focus on the compliance issue. So Mr. Kyari, I would love to ask the first question about how you're seeing this OPEC agreement. You've pledged that Nigeria will comply 100% with the cuts. Can you talk about, if the agreement you think will help balance the market, and how Nigeria is planning to meet its cut requirements?
Thank you very much, Halima, and I appreciate the opportunity to speak to you and to the rest of the audience. I recognize clearly that it's a very, very distinguished audience and a very informed audience for that matter. But what is very important at this point is there's a challenge in the market. The COVID-19 came with its own issues, particularly bringing oversupply into the market, cutting down demand to levels that we have never seen, creating a situation of stock levels that we have never seen before, having vessels filled with crude oil that we have never seen in the history of the oil and gas industry. And of course, we also know that prior to COVID-19's entry, we also know that there was oversupply in the market, and OPEC and the partners were trying to see what they can do to pull that down to rebalance the market. And of course, the complications of COVID-19 came, and through all the new challenges that we are seeing today. We know today that without the OPEC plus, which includes nearly every producer, some by default, some by understanding that you do have to cut production and you do have to cut supply. And that engagement resulted in a situation where all of us agreed, OPEC and all the partners, that we do need to take down some volume out of the market. And we also realized that conformity is an issue because not all of us were able to conform. The entire OPEC basket was able to do close to 80%, not 100%. That means that there are many others who couldn't meet that commitment. And that's also understandable because when you try to pull down production from wells, there are technical steps that you have to take. It's not what you can realize in one day. And that became the reason why the OPEC Plus decided that we do need to extend the first 2 months of the pull down of the volumes. And everybody agreed that this needs to be done. Doing that means that some people will have to add more cut to their current supply production to compensate for what happened earlier in May. We are one of the countries that didn't meet 100% compliance, but I can tell you in the last 10 days, our actual daily production indicates that we're actually in a conformity situation. And into June, and by the end of June, and probably latest by the mid of July, we'll be in full conformity, not just for the volume that we have lost, but also compensate for the current agreements that we have reached. It means to us that doing this is the right thing. The market needs this. You don't want to produce oil and give it out. You also don't want to kill businesses. What we saw happen in the March and April is simply taking down the oil and gas industry. As we know, it's a very important segment of the global economy. Everybody needs the oil and gas industry. What the banks need it, all of us need it, transportation needs it, and everything. And therefore, we're pleased and we're very happy that we'll comply to this situation, this engagement in the best interest of the entire global economy. Thank you very much.
Now, the Joint Ministerial Monitoring Committee of OPEC is going to be meeting every month. I think the next meeting is going to be on the 18th. And they're going to be sort of looking at the supply and demand situation, the global economy. Do you anticipate potentially the need to extend this cut further out in the year? Like, what is your outlook when you look at the oil market? How challenging is the market? Are we seeing demand coming back? Like, what's your assessment of the health of the oil market?
Yeah, the ministers across the OPEC countries and the OPEC Plus, they're finding it tough. It's a very tough time for them to make those decisions. We, the producers of oil, the national oil companies, the independent companies, they're not everybody that can think of. We have a challenge in the market to just make sure that there's the right balance of supply and demand in the market. But for the ministers, it's much more bigger issue. For many of countries that are resource dependent, like our country, our budgets depend largely on production from oil, revenues from oil, and there are many countries like that. And unless they are able to carry all of us along to make sure that this production balance is achieved, to be difficult to attain stability. And what we have seen happening now is clearly a situation where we can achieve the 100% conformity by all countries. There may be no need to have this same volume extended into August. That may not be necessary. The compensation that will be done in July is specifically to address the situation where people couldn't make it in May. And beyond that, there's already an agreed framework of extension up to December, and thereafter a single number to the end of 2021 into early 2022. I don't think it is to be necessary to do for that cost. But all the same, we also know in the market that there could be oversupply to the extent of 7 million barrels even by the end of December. But this will fade away. A number of things are happening about consumption which are not anticipated. The comeback that people are expecting is coming at a level that is not expected. You can see that a number of countries are coming back very quickly, and the consumption forecasts have indicated that will not be that fast, but we are seeing very fast recoveries. So I don't think it will be necessary to continue to add additional costs to this.
Okay, now let's turn to the issue of the Nigerian investment environment. Could you talk about sort of the challenges that Nigeria is facing, the opportunities that you think are there for investors to invest in the energy sector? There's been a lot of focus on the domestic energy sector, the refineries. Could you walk us through sort of what your key agenda items are in terms of the investment climate?
Thank you very much, Halima. Our country, I'm sure this is clear to the globe, that we're the largest economy in Africa, probably also almost the fourth or third largest democracy in the world. Today is our Democracy Day. It means that there is freedom in this country. There is an agreement that common good should serve everything that we are doing. There is rule of law, a very significant increase in adherence to rule of law, and so many things that are happening. And we have enjoyed uninterrupted democracy in the last 20 years. And this has brought on the table the need to see the realities on ground, that this country will be the third largest, most populous country in the next 30 to 40 years. So it's a big market that is opening. It is coming up very gradually, but clearly this is a market of opportunity. And for you to satisfy that market, the oil and gas industry becomes the greatest tool that we have. The oil and gas industry has opportunities for upstream investment, downstream investment, and of course, as we all know, 70% of West African gasoline consumption is done in Nigeria. It means that this is the market for tomorrow. If we are able to create opportunities for others to come in, now we know that there are assets that we're going to put on the table next year. I'm sure the other Minister of Petroleum Resources will speak about that. But I know for sure that there will be a licensing round that will come next year. We are working on our petroleum legislation to make sure that before the end of this year, we have petroleum legislation in place such a way that there is visibility around what investors can expect. Can they recover their costs? Can they get a margin? Is it competitive in the world where you can find oil nearly everywhere in the world today now? And the reforms that we are doing today to ensure that these reforms come into fruition, which means that there will be a petroleum legislation this year that will clarify everything that we need to know. We're working with our partners. The investor community is aware of what we are doing. We're engaging them. It's a very different climate. The government today is focused on making sure that our partners and our investors are convinced that this is the way to go. And as you are aware, the only LNG FID taken anywhere that will work is what we did this year. So in this environment, the COVID-19 situation, it is a very big surprise to the world that we could take an effort. It means that this country is trusted. We have a situation where opportunities exist. We are fixing our refineries, and that's an opportunity also. We don't have all the cash to put there. And what we are going to do is to get some form of partnership with others to put their money, do a throughput, and we'll pay them for that, and then they can get their money out of the refinery. And we're going to do a transparent process. In fact, to trace this, what we did is to get the best in the market to help us do this. We have an engineering company, but we didn't stop at that. We also invited, I'm sure you know, KVR, to help us as our owner's engineer to deliver on this. And we are seeing a sequence of events that are happening, deepening our gas investment. Today, we have financing around the AKK pipeline, which will deliver gas into the market, rising to the level that we have from the 8 billion scope that we have today to something much higher. We are targeting 12 to 13 in the shortest frame of time, and this will explode this country. It creates opportunity for investors. It creates opportunities for oil companies to come and work with us here. And we have seen that interest. This country is the country to come, and it is very obvious that the activities on ground support this. Of course, Halima, I agree with you that there are opportunities here. This country will be a great place to be. And bearing all circumstances, we also understand that the finance market is challenged today. But even where there's a challenge in the finance market, people look for the best of places to go. And what we see today in our environment, despite the fact that everybody believes oil and gas will become irrelevant in the near future, but we don't think that will happen. We know that even up to 2050, oil will still be very, very relevant. We're a growing economy, we're a growing democracy, and we know that our population is growing. There's a market here, and there's a market particularly for gas, and these are where the opportunities are. Thank you.
I was wondering if I could just ask a follow-up. As Randy mentioned, I actually started my career covering Nigeria nearly 20 years ago. And a number of the issues that we were sort of focused on in the US government in terms of our partnership with Nigeria, there's still issues that is part of the bilateral discussion now. So for example, the issue of gas flaring, the issue about the refineries. I think it's one of the things that might not be appreciated is you're Africa's largest producer, but you import large quantities of gasoline for domestic consumption. So can you talk a little bit about those two issues and where Nigeria is on those issues right now? And just, you mentioned the petroleum industry bill. That has been something that we've been sort of waiting for years. And now it looks like it may happen at the end of the year. Can you talk about that bill and the key components of that bill?
Yeah, thank you very much, Halima. We know that it's a difficult thing to explain why an oil-producing country will become a net importer of petroleum products. Yeah, the reason is very simple. We couldn't fix our refineries. And that's very difficult to explain also. Why can't we fix a refinery? We started this very many years ago. For 20 years, all attempts to get the refineries failed. For a very simple reason, there's a strategy problem. First, we never knew what we want to do with it. We didn't get the right advisory, the right strategy to go through this. And we started a process 4 years ago to have getting oil traders to come and help us fix it. That never works. We also have a strategy to make sure that we get in the original refinery builders to help us do it. That's not their job. It's just like you buying a car and you say, oh, look, Toyota must come and repair it for you. That doesn't work anywhere. So we change our strategy to make sure that we have a new framework. This framework will enable others to help us, investors to put their money into it, and ultimately we'll change that equation. And the way to do it is very simple. First, we'll fix the refinery. We have set a target for ourselves. We have a clear strategy for doing this. We have a 445 owned refinery capacity, which if we fix it, it gives very good. But for instance, it's going to just give us 80 million liters of gasoline. That's not what we need. Today, our consumption is anywhere between 50 and 55 million liters a day. So when you have 18, that you still need additional capacity. We have taken another step, which is to bring in what we call a condensate refinery. Condensate refineries are just split up plants, easy to fix. Within 2-3, maximum 3 years, you can have one in place. Today, by July, we are sure that we're going to have FID on one of them. We're looking at a total combined capacity of about 200,000 barrels per day. And the first one will be about 50,000 barrels per day. So when we fix that and we're able to get investors to put their money into this, we'll have additional capacity. Then, of course, you're also aware of the Dangote refinery. It's going to deliver 650,000 barrels per day capacity. The combination of this is that within 3 years, this country will be sufficient in the supply of finished petroleum product. Then we can look at markets now. We'll be looking for markets after that. But yes, I agree with you that we can't be talking about fixing refineries at this time. Yes, it is a difficult thing to explain. but we have a focus that we know that we can deliver on this. Now, coming to the reform around petroleum industry legislation, I don't want to commit a bill yet, because until you take it to the legislature, it's not a bill anymore. So it's a legislation we're trying to put in place. That legislation will create the environment for competition. It will create a much more competitive fiscal environment. It's also going to make sure that partners have a visibility around their investment. You have a 10, 20, 30 years view of what's going to happen. Those uncertainties that have stopped investors from coming to our countries will go away. It is possible, it's very realistic that we can put this bill in place. I know that our Minister of Petroleum Resources, Chief Silva, is working on this. We're working as a team. We're engaging our partners, and I know that this is different. This is a different approach. We didn't do that in the past, and what we're doing there will deliver it. And there is an urge and eagerness, even in the legislature, to get this done. We're tired of this. We can't wait for it for 20 years anymore, and we'll get it fixed this year. Thank you very much.
Well, actually, I'm going to ask a follow-on from my friend David Goldwyn, sent in a question on this, and several other attendees have sent in the same question. They're kind of asking, what is different this time around regarding this legislation? Like, how do we know this time is going to be different in actually getting the legislation enacted? Like, what has changed in the dynamics internally in Nigeria that you now believe that this will actually happen?
Yes, one thing that will change is the fiscal structure of the bill. Always you have this challenge that you have the most extreme of fiscal environment in this country. When you look at the numbers around the world, you see that the government here is the highest in the world, close to the highest in the world. But that's not realistic. And that will stop every process of getting the legislation in place. There will be disagreements, and that attitude will change. And now we are focused on making sure that we have the most competitive environment in place. The second thing we're going to do different is engagement. That engagement was like in the past. What we do is that we talk to our partners after the bill has been completely sorted out. And then you have all those issues and you are never able to resolve it. Today, we're engaging our partners, we're engaging all stakeholders prior to presentation of bills to the National Assembly. And by the time we're done with that, and with the alignment of the national legislature, I can confirm to you that the leadership of the Senate and the House of Representatives are clearly focused on getting this done. As a matter of fact, they want it done by July. But of course, COVID-19 took away some of our time. But I know that the commitment that we have today, the commitment we have from Mr. President, who has also clearly told us that we got to deal with this. We have to cross this. And this sort of an incentive for us to do, because Mr. President said we got to get this done. And once we get this kind of leadership persuasion, leadership drive, which is clearly a very transparent approach, a leadership that is trying to deliver on the promise that they have made to the people. That is part of it, is to open the industries, open the oil and gas. You can't do this until you get the petroleum legislation fixed. And that determination, and of course the persuasion that our partners understand what we are doing, both the local partners and the international partners understand what we are doing, and together we can deliver this. And this is a very different approach. And I'm very confident that this will be done.
Fantastic. Now I'm going to go now to the Q&A as well. We have had a couple questions on the issue of gas flaring. Ambassador Herman Cohen asked the issue about sort of what are the plans in terms of tackling gas flaring? How can that gas be used for domestic power generation? So if you can give us an update on the plans for addressing flaring as well, that would be fantastic.
Absolutely. Gas flaring is a child of necessity today because we didn't know what to do with it. And businesses are, as you're aware, we are a gas province. Nigeria is a gas province. We have 200 trillion scope of gas in this country. So we're more of a gas country than an oil country, but there is no deliberate attempt to explore for gas ever in this country, because that's not the focus, because two things we're lacking. One is there's a clear visibility towards a local market, a domestic market, which is not visible to investors. And secondly, the entire gas investment framework, the fiscal framework of gas, is not very clear. And until you sort these two out, investors are not going to put their money. And therefore, you are better off, and it's cheaper for you to produce oil, flare the gas, because that's not what you are looking for. But today, there are initiatives to convert those flare by people who don't have interest in the oil to get that done. There's an ongoing engagement to take out all the flare, but we are not going to stop being at that. The focus we have now is to deliver gas into the domestic market and then monetize the entire gas portfolio that we have. And we are seeing investors taking interest in this. We are seeing the opportunities that are there. So the issue around flare will simply fade away because it won't be there anymore. As I speak to you now, there's an ongoing process of selecting partners who will take out the flare, take out the gas at the flare site. And beyond this, we're also engaging people to make sure that we start looking for non-associated gas. Today, every gas that you're seeing came as a result of looking for oil. But we're going to start looking for gas in this country. We already have non-reserves that we can develop. We also know that there are big opportunities that are there in the deep water because the fiscal environment also is not clear in the deep water. That's why nobody's putting his money into that. We are pulling a package. That package is to make sure that there's clear visibility, there's legislation that will support this. There's a commitment by the political class and the government to make sure that we deliver on this. The combination of this will ensure that these players will go out. You don't need any big strategy around it. Make sure that people can put their money and get benefit out of it. And that's what was lacking. Today, there are issues around bottlenecks around putting your money into gas, into the domestic market and recovering your money. That are being resolved, particularly around the power sector. The power sector is very complicated today because the transmission systems are weak, distribution systems are weak, and we know that government is doing something about the bottleneck in that. And one that is the bottleneck, and we can have possibility around the end user, the consumers will pay for it. Then, of course, you will see the investment on the gas from the upstream will come. And these are all working at the same time. I'm very sure this is going on today. And ultimately, it is a balanced business environment that will create the opportunity for gas player to go away. Gas player is an abnormal thing. Nobody does. The amount of gas that we play here is unbelievable, but there are efforts today to get that out. Beyond just putting some fees on flaring. That's not attractive. That's cheap. People can do that. But what is possible is that can you convert that to money, and that's already happening.
So that's fantastic. So we've also had a number of questions on the issue of diversification away from oil. As you think about sort of energy transition, what will the role of a national oil company like NNPC play in sort of leading the diversification drive in Nigeria? I know you've basically announced plans to build a number of hospitals to help deal with the whole COVID-19 issue. If you could talk about some of these diversification efforts, that would be fantastic.
Our primary focus, Halima, is to use the opportunity of the gas resources that we have. And then we deliver this into the market. We're going to be a global company. NNPC has great assets, but we also have great opportunities. Every company is transiting into becoming an energy company and not an oil company. We're going to be an energy company. And an energy company does nearly everything from renewables into other business sectors. So let me clarify on the COVID-19 hospital. That's not a business. We're just doing some form of CSR activity in the industry. What we did is to pull all our partners together to see what can we do during this COVID-19. And the result of that is an understanding that we can build hospitals as a CSR activity of the oil and gas industry to deliver it to the states. So it is not our core business. That's not where we are going. And there's this misunderstanding that we are trying to build hospitals. That's not what we want to do, but we will build hospitals. There are partners who are looking for opportunities because as you are aware, this is a very great country with 200 million people. The medical infrastructure is still weak. There are opportunities for business. As an oil company, we have two roles. One is to see the opportunity of the business, and then we can expand our business horizon. But secondly, doing that is becoming of help to the country. And this country needs those facilities. And people trust our brand. And because they trust our brand, they will come and fix hospitals with us. They can set up hospitals. But that's part of the many things that we're trying to do. We're also looking at the renewables. As you're aware, the renewable, as we see today, per capita is far more expensive to create 1 megawatt of power using renewable than you do in oil or gas. But that's diversification that all of us are trying to do as a matter of responsibility, that we're looking at that direction. We're having some partnership that will deliver on this. And beyond this also, the oil and gas has linkages with nearly everything in our country. Now, in this country, the oil and gas industry, NNPC is everything to this country. Therefore, we avoid nothing. But we also manage our risks. We don't want to do things that we shouldn't be doing. Yes, we are going to go into housing and so on, but that's not our focus. Our focus is to deliver gas into the domestic market, monetize the gas asset for export, and also take the benefit of the oil production, that the resources that it creates to build on our infrastructure in our country, and ultimately we'll have an economy that is sustainable, that is useful to all.
So we have a follow-on on the whole diversification issue. One of our attendees asked the question about food security and the Presidential Fertilizer Initiative. Can you talk about NNPC's role in that initiative potentially?
We're not really focused on producing food today, but we know that our services are required in a different way. Today we have enormous gas, still comes back to gas. We have enormous gas resources, and with gas you can make fertilizer. And the pipeline network that we're trying to build today across the country is creating opportunity to set up fertilizer plants across the country. And this is part of the opportunities that we're exploring. That's where we come in. We'll encourage investors to start fertilizer plant so that we can give them gas. Once you have fertilizer produced, you have more input into agriculture, and agriculture will build. That's where we come in, not in terms of direct participation in agriculture activities.
Fantastic. So now maybe switching tack a little bit, I want to ask you about the sort of the climate in the Niger Delta. That has been something that has really been a focus of a lot of sort of international observers looking at the unrest that we've seen in the Niger Delta for years. We think about attacks on energy infrastructure. I think about when I started my career covering Nigeria, we had groups like MEND that were shutting down facilities. And now we've entered actually a period of sort of relative calm in Nigeria. Can you talk about what has changed in this environment in the Niger Delta, sort of what facilitated the rise in production? While we still have issues in the Niger Delta, we don't have the same type of militant groups doing attacks on infrastructure. What really changed in terms of the government's outreach to those communities that enabled this period of calm to take hold?
Yeah, Halima, what changed is approach. When this government came into place, the vice president, to be specific, was charged to spearhead an engagement process with the communities. And that became very useful. The result is that communities are now deeply engaged. They are seeing the benefit of having peace in this environment. They can benefit from this oil process as long as there is peace. And also the fact that these assets serve the purpose of all of us. And those community-based engagement, leadership engagement at the highest level of our country, and making sure the facilities are put in place for the communities to benefit from. And ultimately, the combination of this and the other security attempts that government did, so interventions that government did to make sure that there are bandits. Don't forget that there are two sets of people that we're dealing with. We're dealing with bandits, and we're dealing with people who are genuinely agitated. You know that the level of degradation in the Niger Delta is so huge. There's every reason to be angry about that. All of us don't like it. Nobody wants it, but it has to be resolved. And you have people who are genuinely angry for that. And then you also have bandits and criminals. So it's a two-pronged approach. Government is dealing with the criminals in its own way, which means that there's a much more community-based security network that is in place today, and also being supported by the other government security agencies. And that's why you are seeing the calm in terms of the bandits. But in terms of those who are genuinely agitated, that's engagement by the vice president and the minister of petroleum has resolved most of these issues. We as a company, as a business, with our partners have changed our approach. When we establish community-based support systems, CSR projects, we engage the communities more deeply. They take ownership of these projects that we do. And the result is the combination of all is that we are seeing relative peace in this place. The losses that we're suffering have gone almost diminished to very, very small level. There are still incidences, but they are not significant. And that's why you can see stability in oil production in the last 2 to 3 years. And also, you don't hear of those issues around criminals kidnapping oil workers, not that significant anymore. And also, you don't see attacks on the facility because there's a very, very valuable engagement that is going on. I think that's what is different, that is bringing about this result.
Fantastic. And I'm going to follow up on sort of one more sort of energy, sort of security and political issue before we sort of transition back to issues like LNG. I want to ask you about the issue of domestic fuel subsidies. That has been an issue that Fatih Birol at the IEA has really sort of led on talking about the need for subsidy reform. It's a really challenging issue for many producer governments because people in oil producing states believe that low cost fuel should be something that is given to the citizens as being an oil producing state. Nigeria has tried periodically to do fuel price reforms. Your government has announced that you'll be doing another wave of subsidy reforms. Can you talk us through what the subsidy reform will look like? And do you anticipate public pushback on this effort?
I don't anticipate, we don't think anything different will happen today. We have relative calm in our country. Let me explain something. We have struggled with subsidy for very many years. Subsidies scheme anywhere in the world, it's a bad thing to have because you are now, what we're doing today is we are subsidizing consumption. And once you subsidize consumption, you're going to have challenges of not being able to do other things that you should be doing. And then growth will not be there, economy economies will go down. And of course, you have structural issues in the entire economic framework. What was also missing is the realization that subsidy is for the elites in any country. In our country today, because when you say subsidy on gasoline, for instance, that's the only one that was standing until 2 months ago. The only thing that was standing was subsidy on gasoline. And gasoline is not what the ordinary people utilize. And the end result is you've seen over $2 to $3 billion of subsidy every year that we see in our country. That is not sustainable. That is not useful. That could have delivered 1 or 2 infrastructure projects today, which is absent today. And also, beyond all this, the mere fact that we have subsidy in our country creates an arbitrage across our border. You cannot stop cross-border smuggling. Every country is struggling with border issues. I'm sure, Halima, you know this.
Yes.
Much more, we have less resources. We have a lot of capacity to manage that. And the result is that we're almost supplying the whole of West Africa as subsidized product. And that has to stop. If we don't stop, we have to come back to see the decline in development in our country. And what we have done different is that our country people understand now that we don't need this. We do need the cash. We need to remove the structural challenge that subsidy creates so that we can have development in our country. We don't see any much of a pushback. There are engagements that are going on, stakeholders understand what we are doing. And we also don't even need a legislation to do this because there's simply no law that says that you have to put subsidy on petroleum products. Yes, it's something that looks very exotic. People like it, but it doesn't solve any problem. And today we are out of this for good. Our Minister of Petroleum Resources is driving the process. We have delivered on this. We are testing it. There's no subsidy budget in the 2020 Nigeria's appropriation budget. That is gone.
Wow.
That means it's not going to be there. There will be no subsidy this year. And also the COVID-19 situation has thrown out a challenge at us that you cannot take all the resources you have to subsidize consumption. And you have to do things differently. And I don't see any challenge with this.
Okay, I may ask you one follow-up on that, sir, because it seems that it's easier to remove subsidies in a lower oil price environment, but in a rising oil price environment, when those costs are passed on to consumers, that's when we typically have issues in terms of public protest. Do you anticipate being able to sustain those reforms in a potential rising price environment?
The good thing is that product prices don't rise that astronomically. They can collapse easily, but they don't jump up very quickly. And there will be a gradual change as when the price. We all want to see a rebalancing of pricing, but that's going to throw up issue around increasing gasoline costs. This can be managed because people will see the benefit. They are seeing today that we're able to keep everybody whole, where governments are able to pay salary. We took out the subsidy payments to pay for other things that this country needs. We're able to meet our commitments to other obligations. So people will see the benefit. They will not mind anymore because the reality today is that you don't need to pay for this so that you don't get the more important of things done.
Well, now we've had, as I mentioned before, we've had a number of questions on LNG. So I wonder if you could sort of, give your view on the outlook for the LNG market and then NNPC's plans in this sector.
Yeah, the LNG market, when COVID-19, it's very good to put it in context. When COVID-19 energy decline, consumption decline came, the area that is least affected is LNG. Yes, there were a few refusals to take cargoes at the beginning of March. Then after that, it normalized. Because LNG is usually for power and also for petchem and other uses that we put them into, it's least affected by this. And even the ramp up of consumption that we're seeing globally is coming mostly from LNG, then followed by gasoline. Therefore, we see LNG as the opportunity of the future because we're a gas country, we have huge gas resources. We have added one more train. We're adding one more train to our current LNG capacity. We're also engaging partners and having closed out with some conversations to make sure that other opportunities for LNG are done. So LNG is the business of the future for gas-producing country for export because there's still a market for it. Power will continue to be required. Power from the energy sector will largely come from the energy sector. So we know that LNG is the way to go. We're having opportunities that we can see today from the deep water assets that we have, including also some of the land assets we have. So we know that LNG is the way to go, but that also doesn't work in isolation. it has to go with the developments in the oil, in the crude oil segment of the business. And we're working all around them, but I agree with you. LNG is the way to go in the future.
Well, now we have another question on a slightly different topic. It's on the issue of the Sovereign Wealth Fund. And we had a question about the Sovereign Wealth Fund that was created in 2018. What is the status of that? And has the Sovereign Wealth Fund helped sort of the domestic economy in this lower oil price environment?
Yes, well, I'm not very conversant with the workings of the Sovereign Wealth Fund, but I know that the contribution for that fund comes from the excess resources that we derive from petroleum production and petroleum revenues, sorry. And as you are aware, in recent times, the petroleum revenues have clearly diminished, and therefore you do not have too much of funding into the Sovereign Wealth Fund arrangement that we have. But from what we are able to do in the past, the contributions that the oil and gas is able to do to the Sovereign Wealth Fund has now become a very prominent player in sponsoring or in financing of a major infrastructure project. For instance, the third Niger bridge, you may be aware of it. There's one bridge that we couldn't do in 40 years. Now we're getting it done. And that bridge is now particularly sponsored by the efforts of the Sovereign Wealth Fund. And there are other intervention projects, major highway projects, major railway projects are all coming from the backbone of the Sovereign Wealth Fund. Yes, it is the right thing to do. Some countries have huge Sovereign Wealth Fund resources, but what we have today is not significant, but it's certain things are possible. I think I don't know much about that. I think that's enough that I know about it.
Fantastic. So going to more questions, we have another question about the role of NNPC in the President's Economic Sustainability Plan.
Yes. Thank you very much, Halima. You know that government resources, government revenues, 80 to 90% come from petroleum resources. Petroleum revenues account for 80 to 90% of government revenues. That means once you have a collapse of pricing, you're losing that. And that's why government decided to drag NNPC and the oil and gas sector into this conversation. So what do you see happening? What do we see the flow of the pricing? As you're aware, at a point in time, the price of crude oil dropped $13 to the barrel. Our budget level was 57 to the dollar. So that means you have a huge gap of expectation. And we are forced to review our budget level to $30 to the barrel. Today, we are $27 to the barrel all year on average for the year. That means there's significant impact on the expectations of government from the river. That means you have to scale down government spending to that magnitude. As you also know, every other sector of the economy, from the banking to the value-added taxes regime, they all have some form of connection with what happens in the oil and gas. So once activities are down in the oil and gas sector, you see government revenues generally comes down. So what we did in the economic sustainability team is to engage all partners to see how do we cut down our costs, how do we pull up the production, or how do we pull down production, what do we do with our partners to make sure that the prices are right, and how do we also cut our cost of production. That's very critical for the industry. Today, we have one of the highest production costs in the whole world. You'll be surprised that some assets are producing oil at as high as $60 or even beyond that. There are assets that produce oil at less than $15, $15 to $16, even as low as $9 to the barrel. So you have this wide range of production costs in our environment, clearly linked to inefficiencies, and then some risks that don't exist in other jurisdictions that are put in this place. The overall result is that you are producing average oil at $30 to $34 to the barrel for the whole country. That's not acceptable. When oil sells at $13 to the barrel, and then your cost is $34, you're simply out of business. So what we have said for ourselves is that, look, we have to work with our partners. We need to face this. This is a challenge that we can resolve. And we have set a target for ourselves. By the end of 2021, it is possible to have an average oil cost per barrel of $10 to the barrel, total oil equivalent. Let's not make a mistake. It's not just for oil. Every oil production comes with some gas asset. So when you have a combination of this and you see the net cost per barrel to come to somewhere around here, it's very ambitious. I agree with you completely. I don't want to ask that question. We agree that it's ambitious, but it is possible. We're engaging our partners. They agree that we need to pull down costs. There are huge cost areas that we have identified. We have engaged our partners that pull that. And overall, what that will do to the economic sustainability framework is that there will be more taxes, because when your cost is low, your taxes become high, so there will be more money available. Even at low crude oil cost, you can still have some more tax revenues to come into government. You can also have more margin because we're also in business with our partner. We have joint venture, cash call-based arrangement with our partners, which will, as long as the cost is very high, there will be not much of margin. And by pulling down the cost, you will have more margin, even under a $30 oil. What we are trying to see is our contribution is to see that we pull down the cost, prices normalize through our engagement and with the OPEC Plus and our partners. And ultimately, once prices go up, our costs go down, the contribution of oil and gas industry will now become relevant. And that's our role in the economic sustainability team. And that is working. We have delivered our part of the deal. And of course, the government is also playing its part. And of course, we are engaged in all this process. We contribute to this because we have a visibility around investment. The world knows us. We have a brand that is strong and people talk to us. And therefore, those inputs become very relevant to government as we go through this. Today, probably we're the only country that has almost fully come back. The COVID-19 lockdown, yes, it did affect everyone, but because we have a huge informal economy, we know that the impact that it had in other countries, it's not to that extent. We're still evaluating it. We're looking at the numbers to see what exactly happened. But we know there will be some form of decline in economic growth assumptions, but we know that it's not going to be as bad as other jurisdictions will suffer. So we are happy doing this, delivering this on the economic sustainability too.
I just want to follow up because that is such an ambitious target in getting your costs down to around $10. What do you think is going to be the biggest challenge you face doing this on such an expedited timeline?
The biggest challenge is for partners to accept that something got to be done.
Right.
And that's the biggest challenge that we have. And we have crossed that. We have a huge international partnership. The biggest of the oil and gas companies, international oil companies, are in this country. They are very focused on delivering on this target. They know that this is what we need to do. They need our support. We need their support. And there's a total understanding that we need to do something about this. Then at the back of this, we also have local partners. Local partners work differently because they are indigenous company. They don't have as robust framework and international coverage and support that the international oil companies do. So we're engaging them on different platforms, but on the same focus. The focus is that we need to pull down this cost because it is possible to do. And this we can realize.
And as a follow-on to that, we've got a question on marginal fields and the whole issue of the timing for auctioning marginal fields. Could you talk about the process and how you're thinking about the timeline for that?
Yes, the marginal field, I will also like to inform you that that's not my beat. We're also looking for opportunities in the marginal field framework. These marginal fields are actually taken out of existing joint venture assets owned between the corporation and international oil companies. So those are idle fields that are too small for us to worry about or to put our money into, and the others can make use of it. I think that's the whole concept. So we're actually donating to the small players to come in and play. Definitely, this is not my beat. It's the Department of Petroleum Resources that handles it. Everything else that you know is what I also know in the public realm. There's an advertisement. They are going to go through a selection process. They'll get the best of the companies that are available to this. It will be a very transparent process. That's the promise, and you can see that it's very obvious. Every one of the transactions along this value chain will be done electronically and visible to all. So at the end of the day, we're going to deliver this before the end of this year. That's the target that the Department of Petroleum Resources has set, and the Honorable Minister of Petroleum has actually spoken about this widely. And it will be very good if you can just give me a ring. He's going to talk to me. I can tell you to give me a ring. Thank you very much.
Fantastic. And so I'm just going to some of the really good Q&A questions. And on the issue of diversification, someone brought up the issue of the mining sector. And basically, what role can NNPC play in working to develop the mining sector in Nigeria?
Yes, mining is, let me share something with you. You know, when the COVID-19 situation came up, when the decline on petroleum prices came down, crude oil prices crashed practically, then you have an opposite reaction from the price of gold. It never got to such high levels in the last 10 years. So what that means is that the mining sector, the mineral sector is another area that people can focus on. In our country, we have huge resources of gold, diamond, everything that you can think of, columbide, iron, but it has not been optimized. We didn't pay attention to it, but I know also that today the framework is very different. There are licensing rounds going on for solid minerals, partners have come in, massive, large-scale mining activities are ongoing today. We're reviving the Ajaokuta steel mill, which will also utilize the iron ore resources around that area. And because we're a huge natural resource country, and solid minerals is the way to go. It's cheap, it's available, it can be accessed quite easily. I know that the incentives that are put in place by the Central Bank of Nigeria to provide financing for banks to put their money into it, for partners, international partners to come in, the combination of this is that you'll see very significant rise in contribution of solid minerals to the entire pool of our economic activity. Today, the level of contribution is very weak, it's very low compared to oil, but it's something that can change. You can turn this table such that it can compete very favorably with oil and gas production. But as we are aware, you already have established environment, oil environment, you have established gas environment. Yes, that's probably what is dragging down and focus on solid minerals. But COVID-19 has its good parts. It has taught us that we need to pay attention to that. And I know that something's happening.
I want to talk about now the U.S.-Nigeria relationship. You have had a number of meetings with key U.S. officials. Can you talk about sort of what are the key initiatives that you're working on with the U.S. government, with U.S. companies as well?
Thank you very much. First of all, I'd like to thank the Atlantic Council. They helped me and help our country to facilitate some engagement with very major United States agencies and departments of government. I also like to thank the Assistant Secretary for Energy for giving us all the time and the attention, and also the DFC, which engaged us and clearly told us that they can help us. How do they help us? We have opportunities of bringing money into the oil and gas industry that will develop infrastructure that will be of use to a large population. Remember that you have 200 million people living in this country, potential growth to up to 260 million people in the near future. What that means is that this country must be, everybody must pay attention to this country, because you cannot afford to have social crisis in this country. It will be a disaster for the whole world. And the easiest way of getting that disaster in place is to have economic imbalance, is to have people who don't have people without jobs, economic activities go down, and then ultimately it leads to crisis. And that understanding is very useful for the world. This is the largest economy in Africa. Not only that, it is the largest population of African people in the whole world, in this place. So you need to keep this place running and working. And the way to do it is to put money into infrastructure so that people will have jobs, people will have electricity, and then, of course, ultimately they are happier, and then you have all the peace that we need. On the back of that conversation and the realization that we need the United States of America to help us and support us, we have talked to many people, but the biggest promise that I have seen in very recent times is the one that came from the US, and we're working with a number of institutions. We have talked to Bechel, we're talking to KBR, we're talking DFC to help us with some financing. Actually, except for COVID-19, would have taken 2 or 3 major financial support decisions to help us in our refinery rehab financing, our pipeline replacement project, and also some of our gas-based industry. Today, as you may be aware, the United States helped us to do the studies around one of the power plants that we're working on. There's a grant was given to us to help us support on this. And we are looking for more opportunities like this. What that does to us is not that we can afford the cost of that grant, but the very fact that we're going to get the best of support and best of assistance, world-class engineering companies to help us, assessment to be done by the best of the class that we can get, and ultimately getting this thing delivered, not just talk. That when you make a decision, we should deliver it, and we believe that the engagement we're having with some of these US institutions will materialize. We have opened conversation very recently, bearing the COVID-19. I'm sure the US is going to open, planes will start flying. I would like to see planes start flying so that we can go further. But also, COVID-19 has helped us. There are many things you can do today. We're speaking to each other today. There are things that we can do, but there are personal element to financing. And we're looking forward to that opportunity to come. Our country and our government is aware of this. Our president is aware of this, and he's looking forward to help that will come from the United States.
Well, one of the big issues, as you know, in terms of investor concerns about Nigeria has been around issues of, as we talked about, security, of governance, of corruption. What would you want listeners to know and viewers to know about Nigeria that has changed? What is different now in Nigeria that should make them potentially more comfortable as investors in Nigeria?
Yes, what has changed? Number one thing that changed is that we have a president who was elected on the basis that he will fight corruption and that he will be transparent and he will be accountable to all. Accountable to me, all means accountable to our shareholders, our partners. And for everything that the National Oil Company, now zeroing down to the National Oil Company, everything we are doing today is on the basis of what we call the transparency, accountability, and performance excellence. This is our logo. This is what we stand for. And that there's nothing we will do today in this company that will not be subjected to public scrutiny, that will be afraid of publishing in the newspapers, or will be afraid of publishing in our website. And the combination of this is that you have an environment today that is different. Yes, corruption, sometimes people talk a lot about it, but on ground today, we have never seen such massive attack on corruption that we have seen in the history of this country. And this is working because our partners are aware of it. That is why in spite of the challenge that you see globally, banks will agree, or international partners agree to take FID on NNPC, the Energy Trend 7. This is a very good indicator. Today, we are delivering gasoline to our market. I can give you an example. Because of the transparency and accountability process that we are put in place, today we are delivering gasoline into our country in the cheapest of cost ever in the history of this country and this company. And there are many more things that are happening. Competitive tender is in place for all the things that we do. Our partners must be transparent. We have a framework that allows people to have access to opportunities that is open to all. And ultimately, you don't dismiss corruption in one day. It is a process. Getting it out is a process, but I know that there's a massive attack on it, and it has gone down very substantially. And for us as a national oil company, we are focused on making sure that we do things in the most transparent manner, accountable to our population. For instance, I don't know if you are aware, we are the only company in the world that publishes its financial and operational statement every month. No company does this. As a company, we have also agreed to sign up as a partner company to the global EITI. What that means is that, because there are only 4 companies that agree to do that, that gives you context of where we are in the country today. Only 4 companies in our country, in the world, agreed to do this, including every other major company that you can think of in the extractive industry. They all refuse because it's going to put on you the burden of making sure that you disclose everything. You are accountable to your shareholders, you are accountable to the partner, and this is what many companies shy away from. Today, we are very proud that we are doing this. This country is changing. It has changed. There's monumental progress that is made that is not, many people are not aware. And I'm sure that if you can speak to the US Embassy here, they will confirm to you that this is a different country. The opportunities are very different. Transparency levels are very high. And I know that that will bring back investors because with the confidence that we're getting from our partners today, we know that it is reflective of the trust that they have, that we are more transparent, we are more accountable than they can ever imagine. Halima, I don't know if this addresses.
I want to ask you, we're running out of time, but I want to ask you a question about technology and how NNPC is thinking about new technology, digitization. How are you reforming your organization to attract younger talent? How are you thinking about bringing your organization to a new generation in terms of the type of technology you're using?
Halima, today I can tell you that what COVID-19 taught us is to work from home. And that's it sounds very exotic, but it worked for us. We have never been this efficient as a company. We have a huge IT infrastructure that we haven't fully utilized. Now, in the last 2 to 3 months, we're able to put them to maximum use. And we now know that getting automated is the best way to go. As a policy in this company, we have decided that we're going to automate all our processes. We're going to align with the best of practice. In the last 8-9 months that we're in charge of this company, what we did is to move away from the past and then come into a situation where we can automate our processes. We can use the best of technology. And the result today is that our accounts will speak for it. By the end of this year, when we publish our accounts, barring the COVID-19, I don't want to talk about COVID-19 impact on our business. Nobody knows what it's going to look like at the end of the year. But assuming it didn't come, I know that we're going, for the first time as a company, deliver dividend to our shareholders on a clean slate. But that is tough, as I agree. But that's coming from the background that we are more we're a more technology-focused company today. We use the best of class. We get the best of skill that is available to support us. And indeed, to support this, we're also growing young people. Inclusion has pushed us into recruiting 1,050 very young, talented people who are today now training online out of the office, and we're going to deploy them to work, and we're happy doing this. The future is in high tech. We're using every opportunity to do this with our partners, not just deploying to our own businesses, but the business that are partners on our behalf will insist that we must go to the best of class, that we must automate your processes and your systems so that we become more efficient and we deliver at cheaper cost.
Thank you so much. I am going to hand this over to Randy Bell in a moment, but I wanted to thank you for the time you've given us today. I want to congratulate Nigeria on Democracy Day. You've been a very, very important, partner of the United States on this issue of leading on democracy. So congratulations on Democracy Day. And I'm going to hand it now over to Randy Bell.
Thank you very much, Alimat. We appreciate your kind words. This country will be a great country. It's the largest democracy in Africa. The rule of law has come to stay. We are more focused. We are more accountable as a country. And I'm sure our partner, the United States of America, will be happy dealing with us in the future. And now.
Thank you. Randy, over to you. I think we've lost Randy. Have we lost you, Randy?
I'm here. I was on mute. It happens to the best of us. Thank you, Mr. Kyari and Halima. Thank you all for tuning in. We really appreciate you joining us. We really, really appreciate this fantastic discussion. I learned a whole lot. This presentation will be available on the Atlantic Council website, YouTube, Facebook, and Twitter, so please share it with your colleagues. I want to thank all of those who made this event possible, including Emily Burlinghouse, Katie Wimsat, Bronwyn Bruton, Luke Taberski, Roger Morales, Tom Knoll, Jasper Gilardi, and Meyer Jundi. I hope you all join us for some other upcoming events from the Global Energy Center and the Africa Center. On Monday at 11 a.m. Eastern, we'll be hosting UAE Minister of Energy and Industry, and the Africa Center will also be hosting President Uhuru Kenyatta of Kenya next week. Later in the month, we're hosting the launch of our recent report on sustainable aviation fuel policy, as well as a virtual public discussion focused on advanced battery and energy storage technologies. You can find details about all of these events and many more on the Atlantic Council website. So thank you all again for joining us. Congratulations to Nigeria for Democracy Day. Thank you, Mr. Kyari, and thank you, Halima. We look forward to seeing you all next time.
Thank you very much, Randy, and I appreciate your kind words.